All right, good morning. Welcome to today's webinar, 10 Core Principles for Trading the Stock Market. My name is Tyler Ballhorn. I'm the founder of Stockscores.com. I've also been a professional stock trader for just about 30 years, and I wrote a book called The Mindless Investor, which you can purchase either electronically or a hardcover from my website, Stockscores.com. It's not available in bookstores anymore, but you can get it from the website. So today I'm going to talk for 45 minutes to an hour. Whoops. And we're going to go through really the key important concepts that I think will make everyone a better investor, whether you're a stock trader, an investor. I'm going to go through some of those key concepts that are going to make you a better investor today. A little bit of an overview. The goal today is to show you some of the things that can help you be more profitable in the stock market. And it's not just about finding the best winning stocks, but also avoiding the losing stocks, risk management, that sort of thing. I believe that the simple things work the best. And so I'm not going to teach you complex financial theories. I'm going to stick to some of the simple things that I've learned really the hard way over the last 30 years of investing. I will say this, that if you do what everyone else is doing, you're only going to become average. And my approach is not what most people do. And so you need to come into this webinar somewhat open-minded. I don't think I'm going to do anything too controversial, but what I teach you today are the things that I've been doing for the last 30 years. And again, these are the lessons I've learned the hard way by either missing out on opportunities or losing money because I had bad practices. But it does require that you approach today's presentation a little bit open-minded, because a lot of the stuff that I'm going to teach you today isn't mainstream thinking about investing. So the itinerary is I will first explain what trading is, because I think it's a little bit different than what most people might talk about when they think of investing in the stock market. I will go through my 10 principles. I'll talk a little bit about how you can learn more about my approach to the market, whether you want to be a long-term trader or investor or a very short-term trader. I have programs where I can give you my strategies and access to my tools. And then at the end, I'll take some questions. All right, so let's begin with what is trading. Trading is different than investing because we're not buying stocks because we like the companies, because we believe in them for the long term. A trader really approaches the market looking for situations where they can beat the market by taking advantage of the situation. So it's buying and selling when the stock is moving faster than the overall market. And most stocks, most of the time, are not worth trading because most stocks, most of the time, have a strong correlation to the overall stock market, and therefore they're not going to beat the market. You know, if the market goes up a little bit, they're going to go up a little bit. If the market goes down a little bit, they're going to go down a little bit. What we want are the stocks that will go up a lot if the market's going up a little, or the stocks that don't go down a lot if the market goes down a lot. And as a trader, we have different time frames. Typically, we're not going to hold stocks for more than a few months. Once in a while, we'll have one where we hold for a year or two, but we're not looking at long-term investing here. And we can be very short-term as well. When we talk about swing trading, we're talking about holding stocks for days or weeks. And of course, you can also day trade the stock market. I do that all day, every day, taking advantage of fast-moving stocks. And in that case, my hold periods are measured in hours. And I'll show you a little bit of each. I'll show you some of the longer-term trading approaches, some of the short-term as well. Now, I am going to do some more webinars that will go deeper into my strategies, and those webinars will be running next week, Tuesday and Thursday. And if you want to learn more about that, just go into the upcoming events area of Stockscores.com, and you can see that on Tuesday at 6 o'clock p.m. Pacific time, I will do a webinar called How to Be a Profitable Stock Investor. And again, I'll get into more detail of my strategies. And then on Thursday, I'll do one for those interested in day trading or active trading. And again, we'll go deeper into the strategies. Today is going to be a broader overview of some of these core and key principles that I think about. And ultimately, when we talk about trading, we're really talking about taking an approach to the market that is more focused on the stock's trading activity than it is on the company. Again, we're not buying these stocks because we love the company. We want to hold them for the rest of our life. We're buying and selling these stocks because they are moving and they've given us a situation where we can make money that goes beyond what the market return is. So when we look at, a stock chart, And this is really just a visual representation of how a stock's price has changed over time. In this case, this stock, you know, a year ago was at $2 a share, and today is at $5 a share, and it's enjoyed, a pretty nice run higher over that time period. And this is the kind of stock that I want to own. It's a stock that has dramatically outperformed the market. At its best, it has gone up 300% in a year. And it did that because it has significant fundamental change underway that justified investors paying a higher price. And so that would be an example of a longer term trade, one that would require 5 to 15 minutes of your time a week to uncover. And I'll show you the tools that I do that with. And really, it's a matter of patience. When you have a strong winning stock, you just be patient with it until it gives a sell signal. We can contrast that with a much shorter term type of trade. This is a day trade that came up on Friday. It met the requirements of my day trading strategy. And in this case, this is a stock that generated a buy signal right at the open at 9:32 Eastern Time, 6:32 Pacific Time. And it moved from about $3.70 a share to $4.28 a share in the course of just a few hours. And in fact, at its height, it was up, 20, 30% over where the buy signal came. And if you can imagine finding one or two stocks even a week that can move 20 or 30% in a single day, you can start to dramatically outperform the market. Whether it's a short-term day trade like this or a much longer-term trade like this, the footprints, the things that telegraph how that stock will do are the same. And that's what I'm going to teach you today. So principle number one is we want to find alpha. So on the radio show today on Mike's Money Talks, I talked about the importance of finding alpha stocks. An alpha stock is simply one that marches to its own drum. It trades on its own story and is therefore able to move dramatically faster than the overall market. And they're the kind of stocks that we want to trade because if we're going to beat the market, we have to find stocks that move faster than the market. And so alpha stocks are those that are leading the pack. And they typically would have significant change in their fundamentals, and that's what drives the market outperformance. I will put a little caveat on that. It's not always that their fundamentals are improving a lot. Oftentimes, it is that the perception that the company's fundamentals are improving a lot. You can think about some of the hot sectors of the past little while, for example, the cannabis sector. I mean, many of those companies really didn't have great fundamentals, and they still don't, and they haven't really improved. But they were in a sector that was very hot. Investors were all eager to buy stocks in that sector, and therefore, really it was the perception that the fundamentals were improving that drove their market outperformance. It doesn't really matter. All that we really should care about is whether the stock goes up or not. And that is where we want to focus on alpha. Now, I've been using relatively the same method for finding alpha stocks over the past 30 years. It came from a class that I took in university when I was at the University of Calgary studying finance. I took a class where we studied stocks that made dramatic gains and on the basis of important news. So for example, if a company announced that it was being bought by another company, we might see that stock go from $10 to $20 very quickly because there was a buyout. And what we found in that study that we did is that the majority of those stocks that really made abnormal price moves often started their move with abnormal activity. And so I went away from that class thinking, if this is what's happening on these big companies that are listed on the New York Stock Exchange or the NASDAQ Stock Exchange, perhaps it works everywhere. And I started to apply that approach to penny stocks listed on the Canadian stock exchanges. Now remember, this is 25, 30 years ago. I was a student and I was wanting to trade stocks that I could afford. And so I took that approach, that algorithm, if you will. It was some math that we learned in that class, and applied it to Canadian stocks mostly. And I found that it was incredibly powerful for finding stocks that moved well. Now, the basis of that class and my approach today was to look for stocks that are behaving behaving statistically significantly. So they're trading more volume than normal, and they're making price jumps that are greater than normal. Now, I want everyone to ponder this stock, and I want you to look at it and look for a day early in this price trend where the stock was behaving abnormally. I'll circle it for you in a moment, and I'll highlight what I look for. But hopefully, you can see that on this particular day right here, there was stronger volume. So that's what this chart is here. This is the volume chart. And it was higher than any day prior. And the price jump on that day was also abnormal. So here we have a stock that nobody really cared about up until that day. The stock was trading at around $2.20 perhaps, without a lot of volatility. Volume was not all that high. And then one day, it made a pretty significant price jump right here, and it traded 2-3 times its normal volume. Well, we can hypothesize that the reason the stock did that is because there was some news or some new information that was coming to investors, perhaps private information, inside information that was coming to some investors, and it justified them paying a significantly higher price for the stock and trading it aggressively so that they were buying that stock and buying a lot of it. And that is really the footprint of alpha. When you have stocks trading abnormally out of a period where nobody cared about that stock, you have potentially alpha. Now, there's other days on this chart where there's strong volume. There's this day and these days, this day here, this day here. It is not enough to trade just a stock just because it's trading with abnormal volume and abnormal price activity. We have to apply some other filters. And those are the sort of things that I'll talk about in the webinars next week. And again, you can check out those or register for those webinars. They're free as well. Just go to the Stockscores website. I'll show that again at the end of the presentation. All right, so those are the footprints of alpha on a daily time frame. We can do that on a very short-term time frame for those who are interested in making a career out of trading the stock market. Maybe you want to be a day trader. Well, notice here again that the volume at 9:32 on Friday in the opening part of the trading day was much higher than the previous day, and the stock made a price jump that really stands out to how that stock traded previously. This is a very short-term chart. This chart represents what happens every 2 minutes, and in this instance we can see 9:30 Eastern time right here. Well, from 9:30 until around 11, the stock moved from $3.72 to $4.44, but it did so with extremely strong and abnormal volume, and the price action was also very abnormal. And so the principle that I'm talking about, looking for abnormal activity, applies whether you want to be a long-term trader or a very short-term trader. So how do I find alpha? Well, this is really the powerful part of what we're talking about, because if I put that chart in front of you, like the last one that we were looking at, you would say, okay, I can see that abnormal activity. Well, the problem is there's 7,000 to 10,000 stocks that trade in North America. We don't have time to look at 7,000 to 10,000 charts. It would take us days. And so what we need are some tools to help us find that. And so roughly 20 years ago, I built a tool called the Stockscores Market Scan, and its intent was to find the stocks trading abnormally. Now I'm going to jump over to the Stockscores website now, and for anyone that is a member of Stockscores, you have access to this tool. I will tell you later today about how to become a member of Stockscores. But we have some preset market scans in here. And so, for example, one of the scans looks for stocks behaving abnormally. I call it the abnormal breaks, and I'm going to apply it to the US market this morning. And I just ran that scan, and in the blink of an eye, it just found 14 stocks that on Friday were trading abnormally. And I can then look at their charts to see if they have the kinds of patterns that I'm looking for. And you'll notice that I'm cycling through these charts looking for good chart patterns. And when I see something I like, I can stop and pause and blow it up. Now, this is a weekly chart. I could look at how that stock traded on a much shorter time frame, and there you can see a 6-month chart of this stock. And hopefully you'll notice that the stock made an abnormal price jump on Friday and traded more volume than normal. In fact, the highest volume that it had traded in about 2 months. Now, for those of you that have some familiarity with reading stock charts, you will also know that this stock broke its downward trend line on Friday. It did so after the formation of a rising bottom. This is a pretty good signal that investors are not only optimistic about this company, but they also have found a reason to pay significantly more. The stock made a pretty good price jump relative to this stock's normal trading history. And so this is one where I would say it's a pretty good opportunity. I don't think it's a great one. If I was to rate it out of 10, I would give it a 6 out of 10. But that's the skill that I can teach you so that you can go through these charts and say, okay, this one is better than this one. Here's one that I actually quite like, State Street Corp. It, on a weekly time frame, is breaking its downward trend line. It does so from a rising bottom. It's got the right kind of pattern, and it's starting to get a pickup in volume. Now, it doesn't show so much on a weekly time frame, but if we zoom in a little bit, you can see that on Friday it traded 5 million shares, whereas most days that stock trades about 2 to 3 million shares. And it broke through a ceiling price that it hasn't been through in 3 months. So ask yourself a question. If no one had been willing to pay more than $61 a share for this company going back 3 or 4 months, why would they aggressively do so on Friday, breaking that through that ceiling price and trading twice as much volume as normal? Well, I will tell you my hypothesis is that some large investor or investors has done some in-depth research on this company, and they have found a reason to pay more. They have uncovered some information that justifies paying a higher price. And so that's the tool that I use to find that. Now, if I'm a day trader, and I am, then I have another tool that I use. This is something called TradeStation. This is a software package that is an American company. It's actually owned by a Japanese company now, but originally it was started in the US. And it's a great platform for the day trader. And I can look at stocks that were making abnormal activity on Friday again. Here is one on Friday. It started trading abnormally right from the start of trade, and it made a very significant price run, moving from about $2 a share to $4 a share in the matter of hours. Now, it doesn't take a rocket scientist to realize that if you can buy a stock at $250 and sell it a few hours at $350, you've made a pretty smart trade. And these are the kinds of opportunities that I look for every day. But again, there's thousands of stocks out there. How can you do that? Well, I have written algorithms and programs to do that. And these are things that I share with my subscribers, with my students, and I'll talk a little bit more about that later. Ultimately, you can watch my trading screen and it will pinpoint stocks like this as it happens with no delay so that you can buy them at 9:34 in the morning Eastern time or 6:34 if you're in on the Pacific West Coast. Buy them as it happens and ultimately get in before most people do. And we'll talk about one of the other principles in a moment, but it's really about having an edge. And this software and my algorithms give us an edge. Here's another example from Friday. This stock triggered a buy signal at $6, and within an hour it was at over $8. Now, I don't know anything about this company. Couldn't care less. What I know is that my hypothesis works. If a stock is trading abnormally, there's something going on, and I'm just going to jump on board and ride the wave higher. So we have a service called Stockscores Active Live, and that is the service where you can watch my analysis screen. And so you can see the same signals that I watch and sort of get my commentary through the trading day as I talk about it. So I'm an algorithmic trader. That means I'm buying and selling based on rules. I don't buy and sell based on gut feel or what someone on TV or in a newspaper said. I take rules, I test them over thousands and thousands of trades from the past, and I look for things that work. Ultimately, I'm finding things that have worked really well, and then I repeat them. And as long as they continue to work really well, I'll do it over and over and over again. Now, my strategies, whether I am a short-term day trader or a long-term trader holding for months or even years, it's always to focus on alpha stocks. And I have rules, very specific rules, logic-based, and processes to find them. I don't want to be smart. I want to do things based on evidence and based on things that work really well. All right, so let's go to principle number 2. And we're going to fire through these principles a little faster now because the first one I think is the most important. So principle number 2 is don't fall in love. Humans are predisposed to fail in the stock market because we are emotional. We have an emotional attachment to money. And if we are going to do well in the market, we have to suppress our emotions. Now, one of the reasons that I take an algorithmic approach where I am using rules that are logic-based is because it takes the emotion out of the investment decision. The problem is if you get too close to a company's story, your judgment will be clouded. And so many investors fall in love with companies, they get into a hot sector, they really believe in the story, and then they never sell. And if you think about the cannabis sector as a great example, you had stocks that moved from $1 to $10 and then all the way back to $2. Well, if you didn't fall in love with the story, if you treated that opportunity as a trade rather than as an investment, you could have locked in much more of the gain than if you were a long-term investor that really believed in what that company was doing. I don't believe in what any company is doing. I simply look to do what the market tells me to do, to buy when the market tells me to buy, and to sell when it tells me to sell. All right, principle number 3, have an edge. There are millions of people with literally trillions of dollars competing for returns in the stock market. It is the most complex and challenging game that I know. But if you keep it simple and if you find an edge, then you can beat the market. Now, some investors, their edge is having better information. So if you are a fund manager, then you're managing $5 billion, you can afford to hire the very best knowledgeable people to uncover information that most investors will not have. My edge is that I have tools that most people don't have. I have a very disciplined process and I have 30 years of experience. And I can transfer that edge to you because I make my tools available. I teach my processes, I teach my rules, and I'm there to support my students through the process with the benefit of my experience. All right, principle number 4, don't fight the trend. Now, this is a commonly said trading cliche, but it is so powerful. You cannot overcome the power of the crowd, even if the crowd is wrong. And the best metaphor is imagine paddling a canoe on a river. You can paddle with the current or you can paddle against it. We all know what is going to be easier. Yes, it is possible to paddle a canoe up a river, but it is challenging and it can be exhausting. You are much better to paddle with the current. And in the market, it's the same thing. You have to understand what the trend of the market is and what it will be, and don't fight it. If the market is selling off aggressively because there is a correction, don't fight it. Be a seller. If the market is starting to move higher after being in a downward trend for some time, get in that river and paddle your canoe with the current. Because the simplest way to beat the market or to do well in the market is to trade with the market, to find the strong stocks in a market that is moving higher in general. And what that really is doing is it's putting alpha on your side as well as beta. So beta is the market force and alpha is the stock force. And if you can have a positive market force and a positive stock force, now you can really do well. So how do you gauge the trend in the market? Well, I teach something in my courses called inflection points, and that helps us to define the trend. So I'm going to go into this chart here and just quickly explain inflection points. It's actually very simple. I want everyone to look at this chart and try to visualize where the peaks and the valleys are in this stocks chart. Where are the peaks and the valleys? Well, we could say there's a peak right here, and there's a valley there. There's a valley there and a peak there. You can start to pinpoint peaks and valleys, and we can draw lines across those to define the trend. So we've just established that there is an upward trend and there is an upper envelope to that trend over that time period. And what we know is that when stocks pull back to their trend line, they usually bounce, and when they get to the top of the trend, they usually reverse. And when stocks break out from these channels, it's often late stage in that trend where the buyers are chasing emotionally, and it's often actually a sign that a market is topping out. And so in this case, we had a break of a short-term trend right here, and then another one more recently from a falling top, and this stock is actually giving a pretty good sell signal after giving a very good buy signal back here. All right, so that's how we define the trend. Start with inflection points and then just draw a line across it. I can go into more depth with that concept, and I do so in the videos that are available on the Stockscores website. And again, we'll talk about how you can access that later. We can apply that in the same way to a very short-term chart. And it's probably a little bit hard to see, but you can see that there's little dots on here. They're actually plus signs. And those are my inflection points. It's actually been drawn by the computer because I've programmed this software to identify those automatically. And I share those programs or indicators with my users. And then the computer will just draw a line across the trend lines so that we can start to establish where the trends are. And what we're trying to do is sell stocks when they break their trend from a falling top. And so in this case, we had a top here that was lower than the previous one, and we broke this upward trend line right here, and that was the signal to sell that trade. Buy it at $3.72, sell it at $4.20. That's pretty good profit. For every $100 risked, there was a $400 profit on that trade. All right, principle number 5, so essential, often overlooked, preserve your capital. It should be every trader's number one goal, because if you lose your capital, you are out of the game. Every time you take a trade, you need to have a risk management strategy that defines the risk of the trade, determines the position size that you should take given your risk tolerance, and you need to have the discipline to exit that trade if the market shows that you are wrong. And we will always be wrong some of the time. I'm a good trader. I've been trading for 30 years, got lots of experience. I'm wrong all the time. But I don't take big losses, and that's why I have been able to do this for 30 years. Principle number 6, know your risk tolerance. How much are you willing to lose on a single trade? How much gets you emotional? You need to know your emotional limit and keep below that if you are going to be good at making smart trading decisions. If you exceed your risk tolerance, you will start to make emotional decisions. And the most common emotional decision that comes from people taking on too much risk is they don't sell their losers. If the prospect of losing $1,000 on a trade is something you can't handle, then when the market tells you that you need to take that loss, that you have been proven wrong, well, you won't. And now that $1,000 loss might turn into a $2,000 loss or a $5,000 loss or a $10,000 loss. I'm quite sure that there are people with us today in this webinar who have stocks in their portfolio that are showing big losses. And it's simply because you had that emotional attachment to money, you took on too much risk, more than you are comfortable with, and you stuck with a loser because you don't want to feel the pain. So knowing your risk tolerance and using that to calculate your position sizes is a really important principle. So in an example, if I'm buying this stock here when it made its break, I would say if it goes below this line, I'm going to take my loss. So I'm buying at $2.35. I'm going to plan to lose at $2. That means my risk per share is 35 cents. That means that if I buy 1,000 shares, my risk is $350. Now, am I comfortable with that? If I'm comfortable with that, great. If I'm not, then I should take a smaller position. I may be comfortable with a $1,000 loss, in which case I would buy 3,000 shares of this stock, roughly, because that would represent about $1,000 of potential loss if I am wrong. And in this case, the trade worked, but they don't always work. I would say I'm wrong at least 30% of the time. But when I'm wrong, I take a loss that I've planned for. It's a small loss so that I don't hang on to a loser and have it turn into a portfolio crushing loss. We can do that when we are day trading as well. I'm going to buy it here, and I'm going to plan to lose if the stock falls down below that floor price. And right now, I know what my risk exposure is, and I can say, okay, if my potential loss is 25 cents a share, and I'm not willing to lose more than $1,000, then I should buy 4,000 shares. And that would give me a $1,000 risk exposure. And in this case, the stock went up to here. 1,000 shares turned into a $700 profit. And that was ideal. sorry, 4,000 shares. So 4,000 shares turns into a $2,800 profit on $1,000 of risk taken. So I've earned 2.8 times my risk. These are all numbers. I'm going through this fairly quickly. I will go more in depth with this next week in some of those other free webinars that, again, you can register on the Stockscores website in the upcoming events area. But let's move on. Principle number 7, never buy more of a loser. Never, ever, ever buy more of a loser. Not every trade works, but buying more of a losing trade is really making the same mistake twice. It's putting more money into a bad decision. When the market tells you that your analysis is wrong, believe what the market is telling you and get out with that small loss. Because I will say that the big losses are the hard ones to overcome. And if you can't have the discipline to avoid those big losses, then you really got to be right a lot. Otherwise, your winners won't pay for your losers. All right, principle number 8, learn first. Trading is simple, but it's not easy. The stock market is cruel because it gives the test first and the lesson after. So I highly recommend that if you are new to trading, new to investing, or if you're just not having a great deal of success in the market, that you find someone with experience and successful strategies to teach you. In the long run, even though you pay for this education, it will save you time, it will save you money. You know, if I wanted to be a lawyer, I wouldn't figure it out on my own. I would go to university and study to be a lawyer, and then I would train under some other lawyers who have the experience to show me the way. And that can be the same for any profession. My son likes hockey. He has coaches. He spends time learning. He's practicing. He's 7 years old. He's got the next 10 years to determine if he's going to be a good hockey player. Nothing comes quickly. You have to take the time to learn. And don't think that because there's no barrier to entry in the stock market, there's no education required in order to buy a stock, but that doesn't mean that it isn't important to learn first. Because if you don't, you will pay the tuition in the stock market. All right, principle number 9, have a plan. All traders should have a concise, logic-based plan, something written down for when to enter, when to exit, how to manage your risk, the step-by-step process to identify the opportunity and execute the trade, emotional control, and all of these rules should be based on data accumulated from many trades in the past. So when I teach my strategies, I give all of these things to my students, and it's all based on research that I've done over the past 30 years. I have huge spreadsheets of data, and I'll show that later on in the week when I do my other webinars. I'll show you some of these data sets that I have, which are the basis for my strategies. I don't want to go on gut feel. I go on what works over thousands of trades. Finally, principle number 10 is practice. Once you have learned a strategy, practice it. Because your emotions are your enemy, and it will take practice to overcome those emotions. You also have to get good at the process. Now, my strategies are very simple. I can write them down on a napkin, the rules, but it still takes practice to execute them. And one of the things that I provide to my students is a person that can give you feedback while you practice. So if you do a trade and it didn't work and you're trying to understand why, my students can email me with that trade and say, okay, I bought Suncor on this day, I sold it on this day, I think it met all the rules, but I lost money on it. Did I do something wrong? And sometimes you didn't do anything wrong, because again, not all trades work. But oftentimes what I find is that there was maybe a misinterpretation of the rule or a misunderstanding of how to apply it. And so I am in some ways the mentor to my students to guide them through the learning process so that they can practice effectively. Ultimately, we want to slowly increase our risk as you are successful. If you have $1 million to invest in the stock market, start investing with zero, just practice. And then start investing with 10,000 of that $1 million so that you can practice with some real money. And in time, you will gain confidence and experience, and you can then start to put all of your capital to work without being irresponsible with your risk. Trading is simple, but it is not easy. It takes time to learn, and I hope that some of you will let me teach you how to do that. So how do you learn my approach? Well, I teach my strategies and processes to a small number of people each year, less than 100. And in doing that, a student of mine will also get access to my tools. Now, the reason I don't teach lots and lots of people is because I believe it's important to provide a fairly personalized learning experience. And so by teaching less than 100 people a year, I can give that personal experience, but also I can make sure that the strategies don't lose their effectiveness. If I taught my rules to thousands of people, we'd all be chasing after the same stocks trading abnormally, and that would take away some of that opportunity. Now, I started teaching 20 years ago because I think it makes me a better trader. It also helps fund the tools that I've developed. I've spent well over $500,000 developing the tools that I uh, use myself, but also share with my students. And it gives me a little bit of joy. You know, one of the things that I would say is the downside of being a professional trader is it's a pretty solitary game. I sit at a desk in front of a whole bunch of computer screens and I talk to myself a lot. And there is something to be said for having some connection with others and giving them some value and helping them towards success. I get a kick out of finding students that, you know, when students will send me emails or a phone call or a personal comment to say, you know what, I've done really well in the market and I want to thank you for what you taught me. That is a real benefit. It's something, you know, that you don't get from being just a trader, because being just a trader, it's all about the money, but you don't get a lot of that fulfillment. So those are some of the reasons why I teach. So we've got some more webinars next week, and the first one will be on Tuesday, and that'll be about focused on investing, so longer term trading. On Thursday, I'll do one on day trading. And Saturday, I'm going to go give an overview of all the different training programs that we have for those who are interested in those. These webinars are all free. They last about an hour. They start at 6 o'clock p.m. Pacific time. And if you want to register for that, just go to the Stockscores website, go to the Trader Training menu, go down to upcoming events, and you can register right there. And so you just click on the registration link, and it will ask you for your first name, last name, email address, and that's makes you registered for the event. All right, and again, they're all free. I hope I'll see many of you there next week, and we'll dive a little deeper into the strategies, and I think it'll be quite enjoyable. I want to show you quickly the Stockscores Education Center, because I built this a few years ago as a way to teach people all over the world, anyone that wanted to learn my strategies. So again, if we jump back to the Stockscores website, and in this time under Trader Training, we go to Education Center, we have a menu of different modules that teach my approach. Now, this is an area only open to my students, so I've already logged into the website. I've logged in as a member. And so if you try to do this and you're not a member, you won't be able to get in. But what it does here is it gives you a written lesson. So I can click on that and I can get the written lesson. I can watch a video that has me teaching that particular concept. In this case, this video is 13 and a half or almost 14 minutes long, and you know, just goes through the concepts of risk management. And there's an assignment and there's a test. They're all there to help you learn the concepts. So here is an assignment where you have to answer some questions, and there is a little quiz in here somewhere as well. I think that's the icon for the quiz. All self-directed, and at the end you get a mark on your quiz that you've done to make sure you understand the concept. Now, the Education Center has many, many different lessons and videos and modules, and it's all organized online so that you can watch it from your cell phone, from your computer, from an iPad, anywhere that you have access to the internet. There's also strategies. So if I go into the active trader section, these are the strategies. This is a swing trading strategy for people that want to hold stocks for a few days. Here is my day trader strategy. Again, specific rules for when to buy, when to sell, exiting the trade, all that sort of thing. It's all online. Now it's complemented by some of the live training that I do, and I will be doing some in November, which will complement the online trading. So we have two courses that we offer. The investor course gives you access to the theory, which is what we call the foundation. It gives you access to my investor strategies, which are for people that want to hold stocks for weeks, months, years, don't necessarily want to put a lot of time into the market, but want to beat the market. It also gives you access to that Stockscores market scan tool, which allows you to search through the entire US and Canadian stock market in search of opportunities, and it's a great time saver. And you also get email support from me. I am your coach, your guide as you learn my strategies. Access to the Stockscores tools, primarily that market scan tool, is free for 6 months, and then you can renew that access for $300 a year. The Active Trader course gives you all of that, plus it also gives you access to the Active Trader strategies, which are the day trading and swing trading, more for the people that want to really put a lot more time and effort and maybe even make a career out of trading the stock market. That's what the Active Trader course is all about. It also makes you eligible for the Active Live service, where you can watch my trading screen through the day. So the same screen that generates the trades that I take, you can watch that screen. And I have some commentary through the day where I give you my sense of what I think the market is going to do. I do that before the market opens. And then at the end of the day, we review the day, go through the trades that came up through the day, and I try to teach every single day. Oftentimes I'll make a video that day and email a link to that video, and that's all part of the Active Live service. But you can only be eligible to subscribe to Active Live if you have completed the Active Trader course. So what is Active Live? Again, watching me create and monitor the market for day trades. It's real time as it happens. It's live every day from market open to close. You're getting my automated algorithms identifying instant trade signals. So essentially the computer's doing most of the work and I'm helping a little bit, but most of the work is done by the computer. I've automated it all, and again, only available to Stockscores Active Trader members. Now, one other thing that I'm going to do starting November 12th is a 12-week mentorship program. So this takes the Active Trader course and adds even more hand-holding and personal support. So for 12 weeks, we will have a weekly online meeting, much like this webinar, but with a very small group, only 15 students. And I'm just going to walk you through step by step how to do what I've been doing for 30 years. And so for some of you that maybe feel like you want that extra support, or maybe you're a bit of a procrastinator and you need a kick every week to do the work, the mentorship is a great way to do that. You're ultimately, with the Active Trader course and the mentorship, you're going to get 3 months access to Active Live. And it's really for those who aspire to make a living trading the stock market, whether you want to do it part-time or full-time. It is limited to only 15 students because there's a higher level of personalized support from me. I have to limit the numbers. And so that is something that we'll talk about in a moment as well. So I said earlier that I'm going to be doing some live training to complement the online trading, and that will start November 5th. So anyone that registers for one of those courses will have access to some overview classes that I will teach by webinar on Tuesday, November 5th and Thursday, November 7th from 6 till 7:30 those evenings. I'm just going to walk you through the theory, teach you that personally. And then the following week, for those that are more interested in the investor approach, longer term trading, we're going to do market scans together. I'm going to run the market scans on Stockscores. I'm going to show you step by step how I do what I do so that you can then go out and do it. And so again, 1 hour for those 3 evenings, we're just going to practice. On Friday, we're going to look for long-term trades. On Monday and Thursday, a little bit shorter term, but still not day trades. And anyone who does the Active Live, or pardon me, the Active Trader course without the mentorship is going to get 1 free month of Active Trader Live. If you do the mentorship, you're going to add on another 2 months to that for a total of 3. In the Active Trader Live, I talk about how we build watch lists, how we review our trades, how we execute those trades, and I'm just showing you every single day the actual trades that are valid and meet the requirements of my strategy. So there is a bit of a special offer coming up. If anyone registers for either the Active Trader or the Investor course before 11 p.m. on Halloween, we'll get that overview class and the strategy application series for free. So whether you are an investor or active trader, you're going to get the overview class for free and the investor market scanning sessions for free. If you do the Active Trader course, you're also going to get that free month of following my live trade signals. And you can apply it at any time. You don't have to do it in November or December. It's up to you. You just send me an email when you're ready, and I will give you access for that calendar month. So many of my students want to learn for a couple of months, practice for a little while, and then they start using their Active Live month, 2 or 3 months later. entirely up to you. You just have to let me know when you want to do that. So pricing, investor course is $2,495 Canadian plus GST. The active trader course is $3,495. And I want to stress that if you do the active trader course, you're also getting access to the investor course. The mentorship is $5,495. But if you are already an active trader student, you've already done that course, you can just pay to upgrade. So the upgrade from active to mentorship is $2,000. If you're at the investor level right now and you want to move up to active, it's $1,250 to upgrade. If you're at the investor level and you want to upgrade to mentorship, it's $3,250. You get the idea. If you have any questions about this, I'll put my email address on the screen in a moment and you can ask any questions that way as well. So I want to quickly just do a poll here. I don't like to bug people with sales stuff. Essentially, if you have an interest, even a slight interest in one of these courses, then I will just ask that you answer this poll with a yes. I'll post it in just a second here. Just answer this poll with a yes, and then I will know that that is something you want some follow-up on, and I'll send you 1 or 2 emails over the next week or two with a little more information on the different course offerings and pricing and all that kind of stuff. So I'll just leave this up for a moment. At this point, if you have any questions, you can throw them into the webinar there. Just submit them through the webinar software, and I will answer as many as I can. I'm actually in Toronto today. I live in British Columbia, in Kelowna, but I was here for a conference for independent schools, and so I got to fly home. So I won't have a ton of time to do questions. They're going to kick me out of my hotel room soon, but I will do my best. And if I miss some of your questions, please don't hesitate to email me. I will answer that as well. All right, so I'll leave this up for another 5 or 10 seconds, and then we'll move on. And again, I just want to emphasize, I've got some more good webinars coming up. They're all free, so join in on those. Just go to the Stockscores website, and you can register under the upcoming events page. And we'll go a little deeper into some of the strategies and the processes with those. All right, I'm going to shut this poll down. Thanks for asking, or answering rather. And I will follow up with you with just a little bit of extra information in the next week or two. All right, so let's just finish up. So again, if you want to register for the course, you do that all online. Just go to the Stockscores website, and you can do it under the trader training menu, or just go to stockscores.com/learn. And there's a page there with some extra videos that teach a little bit about what the investor course is all about, what the active trader course is all about. There's a lot more information on that page, so it's a good place to start. If you want to do the mentorship, you can also do that online. And I know many of you here today are already, investor students of mine or active trader students, and a lot of people have been waiting for me to do the mentorship again because I only do it once in a while. And so if you want to sign up for that, you can do it right now. And there's a limit of 15 students, so you might want to do it sooner than later. Go to Trader Training, upcoming events, and go down to the bottom, and you will see right here, Stockscores Trader, Active Trader Mentorship. I guess I could put an R in there, spell it properly. And you can sign up right here. It will charge you for that, and it does require that you are an active trader member. So if you are not an active trader member, then you first have to purchase that course, and then immediately after you can register for the mentorship. Again, I don't like to be too salesy, but this is just the path to doing that, and we'll provide some more information on that if you have an interest in it. All right, here's my contact information. There's my email address, tylerb@stockscores.com. Also, you can follow me on Twitter. I'm at Stockscores. And I have a YouTube channel. There's, I think, 6,000 or 7,000 members on my YouTube channel following my weekly my weekly video where I give you an outlook for the market. I try to teach something. I try to provide some stock picks. It's all free. So make sure you go to YouTube. Just do a search on YouTube for Stockscores and subscribe to the channel. I'd love to see more subscribers on there. And it's a great free resource to learn some stuff. All right, so I'm going to answer a few questions the best I can, and then we will wrap up. So someone asked, can we get a copy of this presentation? I did record today's session, and I will email out a video of it to everyone that registered. And so if you registered, obviously you have, then you will get an email with a video link once it's been uploaded. Probably won't be till tomorrow, but I will send that out. And so One person asking about how they renew their membership. They haven't traded in a while and they want to get back into it. Cal, you can do that right on the website. Just log into Stockscores, and when you log in, you will come to this page called, what is it called here? When you log in, you will come to the My Account page, and on this page there will be a link that allows you to renew. If you have any trouble finding it, please send me an email and I'll check into it for you. But you should be able to sign up right online and renew your annual $300 so you can use the tools again. And again, if you have any difficulty with that, please let me know. All right, I'm actually not seeing too many more questions. I hope that many of you will join me next week with some of those other ones. And again, we'll take a little deeper dive into how you pick stocks and what I look for. Today, I wanted to give you kind of an overview of some important principles. Next step is we'll get a little more detailed. And for those that really want to get into the actual rules of my strategy, then you can consider some of those courses that I offer and the extra education that will be coming in November. I'm going to wrap it up there, go run to my plane. Well, I'm not going to run, I'm going to drive. It's a long drive from where I'm at. So I want to thank you all for joining me on this Saturday morning, and I will talk to you all again later. And again, if I've missed your question, please just email me. I'm happy to answer it. I'll put my email address up one more time. There it is. Thanks again, and have a good rest of the weekend.